Hey, what's up, guys? Hope everyone is great. We're talking about Bitcoin as usual. This is just my opinion, not financial advice. Please take everything that I say as subjective interpretation of the market based on different data points. All right. So I don't know what is going to happen. All I'm doing is just hypothesizing, and obviously, as result of that, use these videos only to kind of develop your own thinking around these things. Obviously, can we can extrapolate different meanings, and as a result use this as an educational content. That is it, right? With some ideas to share with you. Maybe you find it useful, maybe not. Either way, I appreciate your company watching these videos. All right, so we are basically doing this kind of small consolidation at these levels. RSI is still looking very weak here. The trend we are forming, kind of what it looks like a price action inside this kind of channel here. I talked about the video of the possibility of we doing some sort of a longer consolidation at this range. I still believe that. Nonetheless, I'm more and more convinced that all these ranges down to the 40k, 41, especially the 44. So all these range in particular is a very uh, I would say that there is a very high probability that this is the bottom range of this, right? I'm kind of very convinced that we are not going to go below these levels here, right? So that's kind of what I'm calling here. Obviously, I might be wrong again, probability wise. There is a very good odds for that, and I will get into that in a second. So, but before just kind of quick rundown. We have a lot of options expiring this month, so around $9 billion dollars in options, so around 109 K in Bitcoin that is going to expire. The max pain price zone is the 46K. I suspect that we might actually end the month by getting price skewed towards that zone a little bit towards the right side here. To the right side would be somewhere around the 50K and the 62K. So somewhere around this range, right? Somewhere between the 58, maybe the 70K by the December 31st. Obviously, this is just a speculative uh, interpretation of the options market, because very rarely we see options expiring exactly at the price point level. Sometimes might happen, sometimes happens actually, but most of the time, from a probability standpoint, doesn't happen that often, right? So it's a very rare occurrence, right? Nonetheless, price sitting around 46, we know that is the zone that we would cause a lot of a lot of pain to the options market, right? Uh, so that's kind of one of the views there, and we can see that this is actually the where most of open interest is allocated, right? Is the exactly these December options that carries a lot of open interest, so obviously has a lot of impact. The next biggest one would be the next quarterly, which is March. So this is going to grow as well over time as well. Generally speaking, most of the quarterly contracts will hold the majority of the open interest, so we are talking about December. March, we'll see June also rising as well, and then September. So these three here is actually they are actually the quarterly contracts already placed ahead. Very often these are where the consolidation of open interest allocates more, right? We see that open interest on the futures markets are already kind of rising, and is rising while actually price moving towards this downside, right? So this is, to me, is good news. Is seen is a news that people are basically shorting the market, but they're already also longing the market as well. So I suspect that we probably see some sort of week down to get everyone more hyped, liquidate some low bulls in the process, and then immediately back up, and basically will liquidate people that are shorting this region, right? But overall, the fact that we are finally seeing these these kind of open interest rising in the futures is a sign that the move is likely to come soon, right? Because we are starting to seeing the OI rising and the trend changing. Uh, I don't like the funding rates are basically still basically flipping back and forward. So when we zoom in out here, they basically, some of them gets positive but then flips negative close to the baseline, so it's a little bit inconclusive. Overall, basically flat line. But if we take, for example, a look into the perpetual swap against spot basis, we see that there is a consistent basis. Most of the time, they are basically trending below spot. So this is a sign that there is ongoing accumulation. And obviously, when we see the swaps trading consistently below spot, that's a good sign. As we can see here, a very persistent swap basis on a negative side. So we can see here, let me just kind of activate the names. We can see here that BitMEX, Binance, OKEX, these two in particular, my favorite ones. I like to see these ones trading below spot. And we can see that they consistently trading below most of the time, right? Whereas FTX and Deribit are often the ones that actually start seeing trading above. This is good news. FTX trading above, but we have these ones trading below is actually bullish, right? So that's kind of take noting that's important to note. Nonetheless, would be great to see these kind of spiking down, having orders around this range, waiting for these there to dip. The problem is that this can actually get front run because everyone, or at least some people, already waiting for that. And as a result, we might actually not get it. Nonetheless, it's good to have those some bids there just in case, because I think that if we get into that range, we probably going to bounce fast. And the reason is we have took a picture of the order books again, and it's getting stronger and stronger. We have here 700 Bitcoin at 44. We have 1,152 at 52K and 800. So this range here is super well liquid. So there is a lot of dollars here waiting to buy all these Bitcoin, right? Whereas here we have 700 maximum. The biggest one is 700. So it's equivalent to this one around this range. So 742 at 70K, this is around $50 million, whereas 1 million 1,1 K at 42 is more or less equivalent to 45K or something like that. So we can see that there is a huge discrepancy in terms of dollar valuation. But what matters is how much Bitcoin we can get. And the reality is that there is a lot of Bitcoin here waiting to get acquired, or a lot of dollars here waiting to acquire all of these Bitcoin. So, and I find it very hard to believe that we are going to see all these more than 3,000 Bitcoin being sold at these low levels, right? So very odds favor the fact that we are going to bounce here, and then we can observe that the books are pretty liquid at this range. So this implies that a move above this 50K, we probably start moving very fast, maybe a bit of resistance here at 60K, but then we see that there is another inefficiency as well immediately after, and we get into this range. So the 70K towards the 76 is very there is a lot of protection here, a lot of bidding going on, so very strong liquidity. So but the reality is, nonetheless, all the combine of this zone is still lower than this chunk of Bitcoin, right? So what implies here is that all the Bitcoin is going to get bought here is probably not get sold around this range, because this range here it will require more dollars to pierce through, but people will get way less Bitcoin, and this Bitcoin very likely not to getting, or at least some part. Obviously, people will short these naturally, but we can see that the demand is massively stronger than the supply, right? The supply of Bitcoin. So that's kind of one of how I interpret it. Obviously, it's my subjective interpretation, but so far books are pretty consistent, pretty reliable, especially at this macro view where we kind of group orders by big chunks, by 1K or 2K. So I really like to group orders by 1K, 2K, or $500 dollars difference. So that's kind of the my three favorite group orders. And so that's kind of pretty, and that is pretty consistent with these technical levels, right? So we have a lot of technical, we have a quarterly open here, we have a monthly, where at the moment we are seeing that strong resistance going on. And another point that is important to notice is when we take a look into the futures market, we can see that this is already showing strength. We see that we have the trend line here, and we are finally seeing the premium coming from the futures starting kind of forming a base, right? So we see that there is ongoing shorts are getting closed, or actually futures are getting bought, and we can see the same here, a trend line here, and then from this point we are seeing a more consolidation stage of the premium. So that means that there is shorts that are basically getting closed, and possibly longs, speculative longs in the futures markets taking place. Although generally longing futures is not super recommended because we are obviously taking the risk of taking the extra risk. But in Bitcoin, 4%, 2%, even 6% is not a big deal. So it's beneficial to take a long directional speculative position at these lows against futures markets instead of, for example, long in the perpetual swaps, because the perpetual swaps, for example, if you want to take a swing or a position trading, basically implies that we're going to have to pay funding rates at certain stages and every 8 hours, and that's obviously something that could tax on the position. Whereas in the futures, we don't have that. We don't have funding rates. We don't have rollover, and all we have is really the end of the settlement of that specific contract. We have December, March, June, and September. And if we are super bullish, we can definitely take a position in the September or June or March. While the premiums, although are still a little bit high, that means that we are going to buy Bitcoin at a high, or a futures Bitcoin at 6% extra premium. But if Bitcoin go up more than 6%, which likely to will, right? If we get into new all-time highs, this is going to justify, and also in the future, very likely in the top of the markets, these premiums are very likely also to get very high as well, similarly to what happened in March and April, like here, right? So we can buy a premium that is high, but then we can't possibly compensate into the future. Obviously, this is very speculative and very risky. Not recommending people to do this, but I'm just kind of more or less explaining the logic here, right? That's why I'm saying that is um, one of the things that can be done here, longing futures contracts and for the very long term, and leave and forget, right? And that's kind of the consolidation. We are seeing that those premiums are finally showing a bit of a consolidation. If I zoom in here, we see that we have these kind of massive we have let me just come on, move here down here. We have this massive down pressure, but now we are starting seeing that after this move here, and I'm going to zoom in. So we have this on the September futures is the only exception, but we see the June and March already showing strength, right? So this is kind of good news. Is good that there is ongoing strong consolidation. Nonetheless, we cannot see. It doesn't mean that we cannot see a spike down, right? But I like what I'm seeing in the premiums. It implies that shorts are getting close, or that directional longs are getting taken place as well in the futures markets. Not very strong though yet, but definitely we are seeing the support being built in the futures premium. So a lot of good news here. And that's kind of pretty much my kind of my analysis. I'm feeling very bullish at the moment, and there is a very high probability that we are aimed to bottom range. So we might actually do a bit of a more consolidation here, maybe a spike down into the zone. Maybe we spike down, maybe test the high, maybe we can do a longer consolidation. We could easily do something like this, right? That could happen, or we can actually just do simply getting here, strong rejection, and then immediately starting bouncing very strongly, right? And then testing this 46k, 60k. So this is a zone. This is the zone that I expect some resistance, especially the 70k, because we saw some orders here. But this is the zone that I want to see support being built after we pierce this zone, right? So once price starts getting towards that level over there, let me just kind of delete here. Once price starting getting, imagine that if we do this, we do a final week down into the zone to absorb all those orders and liquidate futures, then bounce quickly into the zone with this very likely that do something like this, move fast. There's another small resistance here, then we pierce to this level, small resistance, then this is where we find resistance, right? The books are showing that the most of the bigger order is at this range. From this point on, I want to see support being built at this 70k or the 54, right? But ideally zone. The point for this to become bullish is price needs to sustain above this 57, 58k, right? This is a critical zone because this is the quarterly open coupled with a lot of monthly and weekly altogether. It's very close to each other. So this zone here really needs to zone that we need to see support or need to see price trading above that level. for this to become a bullish market once again, at least for this to go over to test the 70k, where we have a lot of orders at this range between the 70 and the 74 or 76, I suppose 76. Let's take a look again, just again. Yeah, 70k and the 76k. This is the zone that has a lot of sell orders here, and I suppose maybe we do some sort of consolidation at this range before piercing through, because there is a lot of sell orders here, right? We need to see more demand at this level to pierce through those orders. Okay, that's kind of why I'm seeing, because we could also be equally, let's think about it, we could be on a macro trading range that can last long. If we look, for example, at the Tesla chart, well, it basically remain in a massive trading range for years, right? And that could happen in a situation like this. Imagine that Bitcoin all of a sudden starting doing some sort of longer consolidation at this range. It could happen. So we cannot just expect everything to go up. I'm bullish. I believe that we are going up, but the market can be easily suppressed for a longer time, get everyone uh, basically everyone hanging with their Bitcoin, because never go up, and then a massive recession happens, and then people are basically forced to sell Bitcoin, etc. That could happen. So those are things to take in consideration when we are looking at these things. Overall, the books are looking strong. From a short perspective, we are all at obvious support technical levels. We're already at low levels. Funding rates are kind of more or less even flat. They keep flipping back and forward, but the perpetual swap bases are showing that swap are more often than not trading below spot. So that's kind of a bullish sign. Uh, there is a lot of panic in the market. And the other day, I was listening to a few Twitter spaces where people are super bearish. Traders are basically flatline in the sidelines. So all that people that basically are very fearful at the moment, and but I'm kind of at the moment I'm very confident about these levels. That doesn't mean though that I could not be wrong, because I can easily be wrong. I just kind of at the moment there is a lot of factors that show a lot of confluence and solid support around this range, right? So that's kind of I have a feeling that there is a high probability of this being the bottom. All right. So we can also draw some trend lines against the RSI. It's not broken yet. So I would expect this to broke, test the high, and then coming down once again, and then would have some sort of a bullish divergence. At the moment, what we have is we can, for example, easily see on a weekly chart, for example, a hidden bullish divergence. Right, we have here. A lower low and a higher low here, and the RSI, for example, here is showing kind of a lower low, a lower high, or a higher low, and a lower low here, right? So this is kind of a bullish divergence, right? A hidden bullish divergence, because we have RSI lower than the previous low in the price from a price. So its price is actually a higher level than here, whereas the RSI here is actually on a higher level than this one here, because it's at lower level. So it's kind of a hidden bullish divergence from a weekly chart perspective. And we can see that price action, it didn't touch this trend line coming from the very lows in September 2020. So which could imply that we maybe do some kind of longer consolidation up to this point. So it's pretty much well possible. I see the possibility of this weakening down to the zone, but all this range price kind of sitting more or less around this range before breaking out and test the 58, 60k, and then going through the next level, because we have some quarterly opens here. We have the 70k, we have the 58k, and we have the 43k. So these are the three most important opens, because they are quarterly opens, and we can see the white line there, and there. And so that's kind of how I'm structuring the market. And because we already saw such a aggressive drawdown, this is kind of looking bullish to me, right? So this is where people are getting panic, and the reality is that we kind of went few days straight, always going down, and weeks. So this is kind of looking, but this range to me is a bullish range, and I find it hard to believe that we are going to crash, because all the volumes are pretty much steady since this markup and the same markdown. So it's just kind of a slow consolidation going on, and kind of that's my opinion, right? So that's kind of pretty much for this video. I think that there is no strong reason to panic, but obviously look for opportunities to long at lows, for at least for the long term. Obviously, in the short term, maybe we have a few scalps that can be done. although being short is extremely risky in my opinion at the moment, right? We should be looking for opportunities to long, because this can easily shoot up very aggressively anytime soon as well. So that could happen. So be safe out there, and hope it was a useful video. See you on next video one. Take care.